Hello, everyone. Lucas, you don't have to wait for too long, not even 10 minutes. I'm here now. Welcome to everyone. Welcome to the stream. I'm a little early today because I was altering the software, which, if you remember last stream I did, or last video, there was some audio issues, and it turns out my mic had failed to a degree. So I've now fixed the mic and the cabling. Actually, it was cabling, not the mic itself, and it's all working. I hope. That's why I'm doing this early. So please let me know if you can hear me well. That would be great. And if it's all good, then that would be great. I don't think you'll be widowed tomorrow, Sarah. I hope not. The Widowmaker's been at work, that's for sure. But not only the Widowmaker, but natural gas Widowmaker too, and a couple of the other things, metals, of course. So please just type up in the chat if you can hear me well, and if the sound is good. And then I'll just go through a few things and check everything up and say hello to everyone, and then we'll get started on time as usual. So let us know if you're here and you're enjoying the stream. Nigel, new contract in natural gas looks a bit of a mess with those huge candles. The massive gap to the upside, smaller gaps to the downside, and US weather split in half. I like the way you say that, Nigel. Split in half, you're right. Some say, some warm reports, some not so warm. Some cold reports, some not so cold. So yeah, split in half. We will have a look at that. It is a very tricky contract. But I think it might not be as bad as silver and gold and crypto. So maybe if you're trading natural gas over the last couple of weeks, you actually chose the right instrument, whereas some of the other ones were really tricky. That was me. Hello, Emily Trading. Nice to see you. And everyone that's here. Yeah, so we'll talk about natural gas, of course. And then we'll talk about metals. I think the main things are going to be metals, natural gas, and crypto. I'll try not to harp on too much about the crypto. And get onto the other stuff. Now, Sahil sold natural gas on Friday. Okay, it might not be a bad play. We'll see how the charts look. Let's hope you won't be widowed tomorrow. Hello, Vishesh, the gas giant. Nice to see you. Wonderful. So I still have not heard back from anyone whether you can hear me or not, and whether the sound's any good. Hello, Amit, from your son's account. So I still don't know if you can hear me, and I'm assuming you can, because if you can't, you would have, if you could not hear me, you would be saying something by now. Hello, GSA, CF Now. Good to see you. Nice to see you, mate. I assume that refers to a BMW motorcycle. Cleopas, nice to see you. From Lubumbe, I think that's in Central Africa. Cleopas, let me know. I think you're in, if I recall from Ola Prime, you're in Ghana or West Africa, maybe, something like that. Senegal, maybe, not sure. But I seem to recall. Thank you very much, Simon. Thank you for the sound check. I appreciate that. Good to hear you. Yeah, good to hear you too, GSA. Feels like natural gas South Central might gain this week in terms of storage. Sure, maybe. Yeah, it sounds good. Thank you. Fantastic. Thanks, Vishesh. And yeah, Martin, welcome to you. Thank you, Emily, for greeting a few folks. All right, so we will start very shortly, in about 4 or 5 minutes. So make yourself at home. Put your questions up in the chat. If you've got any questions, please ask me now. And I'm sure that there will be some questions regarding, I've already got one to answer actually, about natural gas spot contracts, continuous contracts, and the high overnight fee because of the variations between backwardation and contango on the futures contracts. So yeah, some problems holding the spot price, of course, because it is very expensive, particularly when the futures forward months are so far spread apart. My advice to you would be to trade the futures, actually. Let's get rid of those comments. Rather than the spot. I only trade the continuous ETFs in the final days of the month before the contract rolls over, so that I don't have to suffer those overnight rollover costs. The other thing you could do, by the way, instead of if you do want to and have to or want to trade the continuous contract on natural gas and you're suffering from high overnight rollover costs, one way I used to do, sometimes still do actually, is close your trade seconds before, or let's say a minute before the futures close for the day, and then open them up again the moment the futures open up, not on the weekend, but on a regular trading day. Normally, there are no gaps during the day, during regular trading days, and you can do that to avoid the overnight costs. So that's one thing you can do. Or just avoid trading the continuous contracts when there is a very high contango or backwardation, depending on which way you're trading it, of course, as well. Yes, and reminder, Paul will be back on Tuesday with his weekly deep dive into Bitcoin. Emily, thanks for reminding me. I do have those notes up on my notes page as well, so I will read them out myself, but I appreciate that. And love to you as well, Vib Ishamdar from India. Maybe I've come across you in a professional manner before from India. All right, folks. Well, we're about to start, and I think what we'll do is start on the left-hand side at the top of the charts as usual. I've also got some notes which I'm going to hand out to private group members. So if you would like to get hold of those notes, you really do need to be in the private group. I'm also going to try and give away some. I don't think I can do it actually. I was going to try and give away some free memberships. Maybe I can. I can, yes. Let's send 5 now. So I'm sending 5 free memberships out to all viewers. That's membership to this YouTube channel. And that will be automatically dished out as we're speaking by YouTube. And that's from me to you with love. And if you receive one, good on you. It's not my choice. I don't choose who gets them. YouTube does. You've got to be logged in. So if you got one of those, welcome. And please just make sure you stay on next month. It's a monthly, you got the first month free, right? It's only about $2 or $3 or $4. But stay on for the subsequent months once your free month is up, and support the channel with your $2 or $3 a month. But you'll also benefit yourself by getting hold of members' material that is not open to the public. Well done, Ed, Dragon Butt. Well done. I guess you got a free thingy there. Good. Thank you, Sean May. Appreciate that, mate. All right, folks, it's good to see everyone in here. I think there are about 150 people watching. I can't really see. Maybe I'm mistaken, but it looks like it on. I think that's across all the platforms. I think that's on X and here on YouTube. We're also now starting to stream on Facebook and on Instagram, I believe. I don't think the stream is going out to Instagram, but it is going out on Facebook. So you can watch us there too. You can watch us on X, YouTube, Facebook, Instagram, and maybe somewhere else. I don't know. Who knows? But all over the show. We're streaming live. Nice to see you. Rickster and Ole from Germany. Great to see you. So streaming live on multiple platforms, which is fantastic. And a great job to our back-end team, including Emily and Paul, Crypto Paul. Not back-end, I mean, we're just a team. We're all the same, really. So thank you to those guys for their contribution very, very much as our team grows. All right, now we've got 2 minutes left to go, and I'm going to switch across to my charts while I'm talking to you and just get up. We're on the Bitcoin charts. Actually, I'll start with this, I think. As soon as we start, we've still got 2 minutes to wait. I think I'll start on the crypto charts and then move along from there and just briefly touch on these. These are obviously moving down, and we're in a bear market, right? We've broken down through key supports, down through key technical levels, and so on. And there's no point in looking at all the rest, really, until Bitcoin does its thing and turns around and moves back up. So as a result of Bitcoin moving down, the big coin, the king coin, Ethereum, XRP, Solana, and all these ones at the bottom, Uni, Litecoin, Link, etc. Now, I'm going to tell you what I've done, but if you're in my private group, you know exactly what I've done with Bitcoin and all the rest. And I'm going to tell you right now. So I'm first going to give you the technical picture, a couple of notes here, and then my target for the low side on Bitcoin and my exit strategy for the shorts and how I'll be looking to phase into longs. I realize that many traders have been wiped out, particularly those with high leverage and those holding long positions from these high bag holding positions, and have now been liquidated, wiped out. The last vestige of hope was this bear flag or this expanding pattern or megaphone, which is in green. The bear flags within, that's the rising parallel channel, the bear flag, and the green bit is the megaphone or expanding pattern. We broke through initially the bottom of the bear flag. We've now also broken through the bottom of the megaphone. We now can confirm that this move is moving down, and the technical targets must be now determined based on those two breakdowns and other things, of course, fib extensions, previous support and resistance, and we could even look at oscillators like the RSI and so on. I did have the RSI on here, actually. I don't know why I got rid of it, but I should have it. I should have had it, but I took it off. But we are now oversold on the daily RSI. I want to put this up on here. I'm going to just sort of carry on, folks, because we've started already. I was hoping to segue into the beginning, but we have now started. Welcome to the live stream. I've started with Bitcoin, and I've done the introductions and greetings already. So let's get straight into it. Bitcoin has broken down through the bear flag and through this broadening, expanding pattern, megaphone pattern, if you will. And we now can set a target for Bitcoin to the downside. We started hedging at 89,000. We have longs from 91,200. And I started hedging at 89,000, 33%. And then I think 87,000, 33%. And then 85,000, 33%. Fully hedged by the time we got down to 85,000. And so all those hedge positions from 89, 87, 85 are now in a massive profit for me, whereas all the long positions from 91 are all in a massive loss. However, my account is balanced. The longs outweigh the losses and vice versa, and I'm not in risk. Of course, I've taken a big bath like everyone else because I'm holding massive short positions, long positions, which are negative, even though they're offset by the short positions. I don't like that. Don't like to be so far apart with the hedges. But anyway, what we can do now is determine a direction. The direction's down. We can determine an exit point simply based on the move down into the bear flag itself, and then the move out will be equivalent to the flagpole entering the bear flag, depending on where you draw the flagpole from, either right from the top or from this half-hearted, softer area in the middle here at the 100-period moving average. Let's take the blue one to start. That takes us down to 73, 72, 73, 74,000. And the red one, the much more important one, and probably at this point, the most likely one, will take us down to 62,000 on Bitcoin, all the way down from 120 something down to 62. That's a 50% pullback. And that's in line with the diminishing pullbacks that we've seen on Bitcoin over the various previous cycles, from like 85% to 65%. And now we've got 50%. Maybe we've got to get to 55, something like that. Or so, maybe it's got to go lower. I don't know. But I don't think we're going to stop here. It doesn't look like it right now. And of course, we've got a massive CME gap above us. If we look at the futures chart, which closed on Friday, by the way, at about 80.5. There it is here, this bottom chart. And now we're trading at 77, right? So we've got to go off this chart to get down to where we're currently trading here on the Bitcoin futures. When this opens up, if nothing changes in the meantime, this is going to go right down to 78, somewhere down here. Let's call it 77. That's where it is. And it could just carry on moving down into that 63 level that I've talked about. So that will be the CME gap if we close at the current price. The current price is now at 77.5. That's where we are. Let's go back to this. That was the futures chart. Let's go back to this chart. And you can see the breakdown from the bear flag has taken us into a cluster of support. There is some hope for Bitcoin longs out of this zone. And hence, I'll be watching this very, very closely this Sunday night and early this week, because I must now unhedge at the correct time. I'm fully hedged. That means no matter which way this market moves, I don't make any money. I don't lose any money. Ideally, I'll be making money when the market moves. And so I've got to get unhedged, and I need to find out where. My first preference is this red arrow down here at 62, but I'm aware that we may bounce out of these previous support levels down here at where I've got these lines drawn and these previous swing lows that we've just about reached. Not quite the lowest one just yet, because that's down at 74 and something, 74.5. We've only got down to 75.5 so far. Also, looking to the left, you can see we've got previous resistance over here on the last swing highs, and that's slightly below 72, and that could take us into the 60s and into this sort of higher, slightly higher cluster, just around 70,000, 69, 70, 71. Maybe 70 is the key pivot number, but I think based on this pattern, we must expect first and foremost a move down to 62 into this cluster. And I now have discovered that, very annoyingly, TradingView does not give me the volume profile, visible range volume profile for free anymore. I've got the professional package on TradingView, and you've got to get the ultimate package now to get the VP volume weight, whatever it's called, the volume profile for the current range. So I can't see it, but I can tell you that in this cluster down at the bottom here, where the arrow points and this purple line is actually the pivot point on this chart, or the point of control. So I think it's likely we're going down to 62. I'm fully hedged. I'll try and take profits when we turn around, whether that's going to be in this cluster here of these swing lows, slightly lower towards 70, or all the way down towards 60, 62, wherever that will turn out to be. I'll be watching for daily reversals, any sort of technical tool I can find, oscillators, reversals, candle patterns, trend line breaks, breadth thrusts, whatever it might be. I'll be looking for those sorts of things, probably not oscillators, to determine where this might turn around. And of course, this is the most difficult part. That's all I'm going to say about Bitcoin. But what I do want to say is, while we're talking about Bitcoin, I want to go to my notes and just let you know that, and just remind you that I'll be back tomorrow. So we'll check on Bitcoin again tomorrow, but I'll check out natural gas again. We're going to look at it right now, but I will check out natural gas again tomorrow. So check in with me for my pre-recorded video on natural gas, which we'll look at now live too. So that's tomorrow. And then make sure to join Crypto Paul on Tuesday with his usual weekly deep dive into Bitcoin. And I think everyone should be there. I've been very dismayed at watching the various crypto YouTubers and ex-commenters swinging long, then going short. I saw Crypto Banter saying to everyone, sell all your altcoins now, get out of everything, sell everything and start buying something else. I can't remember exactly what the message was. The other day he was saying buy everything. I'm very concerned about all of this stuff that people are following. Billions of dollars got destroyed this weekend yet again, just like the 8th of October. Billions, maybe 20 billion, maybe $30 billion, something like that are the estimates. A lot of money. And it's because people like you and me, not me so much, obviously, I have my own thoughts, but retail traders, I mean, listening to people like that. Now, I'm not dissing anyone on X or YouTube, but the amount of nonsense is ridiculous. So join Crypto Paul if you want a sensible, risk-structured view on Bitcoin so that you can either save your account if you're in peril, make some money if you're not in peril, structure yourself to get into the moves, make sure you're in the right direction, make sure you understand a risk-adjusted process in trading the wildest market in the world. Bitcoin's not for the faint-hearted. It's not for amateurs, although it's traded mostly by amateurs, and it's more difficult than trading stocks, but it's traded by the worst traders. So don't be them, right? Don't be one of those worst traders. Join Paul on Tuesday. Weekly deep dive into Bitcoin. Make sure you subscribe and not to obviously don't miss that out. And of course, and if you're an altcoin trader, and I'm sure a lot of you are, don't forget to check out altcoin gains, or gems rather, altcoin gems on Friday with Paul again. And he's got an exciting buy opportunity for names like Hyperliquid and Tron that he's been studying this week, which are two of the alts that might be a little bit different to some of the ones that might go to zero. Back to this Bitcoin chart. I'm not going to be buying or doing anything until I see incredibly clear evidence of reversal. And until I see that, I'll be holding these shorts all the way down to 62,000. And if we do get a reversal and a turn in that vicinity, and it's very evident and it's very clear and it's been signaled well, I'll try and get out of some of the shorts and gradually get back to the long side, keeping my longs on, but slowly squeezing out of the shorts and adding to the long side so that I can do that pivot at the right time. The time I don't believe is right now, and I'm not going to be doing it right now for that reason. The rest of the crypto market, I'm not going to talk about because Bitcoin leads it all. I do want to talk about the dollar. Now, fantastic moves on Friday across three main markets this weekend, really, not just Friday, this whole weekend: silver and gold, natural gas, and Bitcoin. Silver and gold, natural gas, and Bitcoin. And they all have one thing in common, is that they're incredibly susceptible. Bitcoin, natural gas may be slightly different because there's weather at play, but let's put that aside for now. But certainly Bitcoin, gold, and silver, and NASDAQ, not so much the S&P. So all the risky stuff, right? Silver, particularly silver, not so much gold. Silver was much worse, 30% down, up, and then down. Gold was about 10 or 12%, I think. Bitcoin collapsed this weekend. I don't know how many percent. It's a lot. And silver collapsing, gold collapsing, NASDAQ collapsing, but S&P not so much. Now, what happened? Well, I think that we got ahead of ourselves on these markets. The dollar dropped through support. Everyone started talking about the dollar dropping through the support after the Bollinger Band squeeze. Look at the Bollinger Band squeeze, folks. Massive Bollinger Band bubble, bloom, and then a squeeze, always likely to create a violent reaction. Now, that violent reaction has not yet occurred, right? We got to the downside, tried to get through, bounced up, didn't even close for more than 1 day below there. And on Friday, everyone was all over the dollar like a mad dollar buying mania machine. Now, look at what's going on. there's a small gap above us here. The dollar is probably going to have to fill that and probably rush up to the 200, 120 period moving average cluster here. And that will push everything else further down, most likely. Now, I want to point out to you that what happened on gold and silver, let's quickly look at that chart. What happened on gold and silver, and this is a 4-hour chart. I want to show you the day chart on silver. I'm going to come back here, but I'm just going to show you what happened. Massive rally up, and then this flush, a flush. And I've made a note here. I spotted this on X. One of the maths guys, I'm a bit of a maths geek myself, pointed out this was a 10 sigma move. In other words, if you understand statistics at all, standard deviations and the Gaussian curve, normal distribution, you'll understand the chance of a 10 sigma move. In other words, it just doesn't happen. It cannot happen statistically without something driving it. And look, this is a bit of a weird analysis, right? Because everything is driven by something ultimately, but this is not normal market behavior. That's what I'm trying to say. It's a 10 sigma move driven by, I think, just the market getting so far ahead of itself that it had to unwind. The dollar got below itself. It had to bounce. All of these moves, gold, massive rallies, all getting a little bit over too excited, over enthusiastic, 10 sigma correction, massive. And I'm thinking, I think, this is my theory anyway. By the way, before I get onto my theory, JP Morgan had a massive short trade. It may have been even JP Morgan who initiated, triggered, or fueled, or spurred this move down. But whatever their involvement was, or their reasons for that were, they got out at precisely 74.5 at the bottom of this move in that moving average, in that candle cluster, which was the beginning of 2026. So look at what happened in 2026. Only 1 month, folks. We've only had 1 month. And in that month, we moved from $75 to 120 something on silver, and then all the way back to 70 something, right back to exactly where we started on the 2nd of January, not the 1st, because 1st is a holiday. 2nd of January, we were at $75.50, where we got to, where JP Morgan got out of their trade. This to me is just a reset. It's a manipulation. It's a forced move. It's a 10 sigma move, and it cannot happen unless someone really, really wants it to happen. We came right back literally to the opening price of 2026 on the 2nd of January, and we bounced out of there vigorously. Now, there's a big problem here. How did I trade this? The problem isn't in how I traded it. The problem is in the violence of the move. So we got short. You can see my positions. I've left them on. We got short there, and I'm not the only one this happened to. Let me move this little green arrow out of the way. Look what happened. I got short right at the top, literally at the top. And the next day, candle was perfect. Just held, and next day moved out. That whole day moved down. Next day was fine. Next day was fine. Next day, this was Thursday, we moved up by another $5 or $7 through the high, collapsed back down again, made a doji candle, and then promptly reversed all the way back down to the beginning of 2026. Now, I got short, I got hedged, and then I got short again. So there's my hedge, the green trade, and that trade, unfortunately, is still open. But I did take profits on the short trade all the way down here, and I've now hedged the short side. So I'm now long with a long position here at the 20-period moving average, a long position right up here, and a hedge just about where we are currently trading, which is a short position. So a real mess. Let's be honest. This is not easy to trade, and the violence of these moves just didn't allow me, because of liquidity, and sometimes my positions size is such that I can't do it all in one tranche, and I just could not do the whole thing quick enough. So I've got a position right at the top and a position close to the bottom. That means I'm long from somewhere in the middle on average, my dollar cost average. I'm thinking that this might be the low, and that we had the reset and we start off again at a slower pace, maybe not even as vigorous as this green arrow, but at a normal sort of rally pace, something like that, and that we'll keep moving up from here. And it won't look like that. It's going to be zigzaggy, of course. So, and I think we could even, drop a bit first, and then it's going to be doing something like this, whatever. It's not going to be a straight line, obviously, but that's the sort of thing. Now, so I'm going to have to try and, I don't know quite what to do, because I've got a long position. I think it's at about $100 or something, the average price. And we're not anywhere near $100. We're well below it. And my other price is well above it. So a bit of a mess. But these are not large positions. Luckily, it's a 10% position. And silver, I generally trade smaller positions like I do with natural gas because of the size of these moves. This was a 35% move, maybe a 40% move. Maybe, no, I think it was 28% move down on silver. Let's go back to where we were talking about the dollar. So the dollar, I think, has reset as well. And it's just moved up into that level. And I think we're going to close that gap, probably move up to these moving averages. And if that does happen, that should drive the rest of the markets down a little bit, or has the potential to do so. Look how we got through that very, very important double bottom and immediately cleaned back up through the top, not even through the gap yet. And as I said, de-risking the asset tape. So all of these asset tapes, gold, silver, natural gas, Bitcoin, not so much Bitcoin, but NASDAQ, S&P, and some of the Mag 7 and some of the tech names, all massive rallies. And we're now de-risking, taking some of the leverage, some of the size, some of the risk off, and just moving into stable coins, really. So stable coins, I think US dollar, USDT, is going to be a safe haven for a lot of this stuff when markets get tricky. And you'll see that USDT, DT, amongst the cryptos, with this big flush, did quite well compared to the other cryptos. So it's a good idea if you're going to go into cash. And there's the story of this USDT tethered currency yield coming in front of Congress tomorrow. And so if that's good news, it could be that the dollar and stable coins are a good play for us to get in and out of. And so when we're trading Bitcoin and when stocks all get on the blockchain, when we're trading stocks, we can swap between, let's say, MSTR or Tesla and USDT or whatever. It's some sort of stable coin. You might not choose that. You might want to just save in Bitcoin or Ethereum or euros or something else like that. But it's a good thing to do it on your crypto wallet to be able to trade. And we can already do it. We can trade gold and silver, moving it in and out of gold and silver into tethered currencies and back into gold and silver, just like we'd be trading on a broker's account. That's the way we're moving. And as you can see, the dollar's moved up, and stable coin, the dollar has moved up. USDT has moved up as the cryptos have moved down. So just an important point. Now, some of these stock names I'm looking at or in, I don't want to cover that today, but I do want to cover two things here. NASDAQ, as I said, the NASDAQ sold off quite sharply. I'll get to your questions shortly. The NASDAQ sold off quite sharply in comparison to the S&P, and we've fallen into the 50-period moving average, so still bullish. We closed fractionally below the 20-period moving average, but we're above the 50, still bullish, still above the breakout trend line, so still bullish, and still above the supportive trend line at the bottom here, just around the 100-period moving average. All of it's still bullish. My line in the sand was down here, and that's where I was going to swip to bearish on stocks, particularly on the NASDAQ, but I'm going to move that up. I'm going to move my line in the sand up one section up to this level now, and if we close below there, I will be considering the NASDAQ may be entering a bearish phase. Notwithstanding the fact that the 200 is still down here at the bottom, we might get a double bottom here, but still we'd get some move from there down to the bottom if it's going to be a double bottom. Also, if we don't hold the apex of this trend line crossover and the moving average cluster, that will be bearish and should take us down to the red line. If we fail the red line, we'll come down to the 200 and this bottom here, which is was my line in the sand. Right now, I'll be turning, maybe even looking for shorts at that red line, and that's at about 24.5 rather, and we're currently trading at 25.5. I've got long positions on from around about 25 or so, just below 25, 24.7, I think, is my average position. The S&P did rather better than NASDAQ, didn't fall back nearly as much, held its 20 and 50. If you recall, the NASDAQ didn't hold its 20, but it held the 50. Here we've held the 20 and the 50, even though slightly below that funny-looking trend line, which is not really a proper trend line anyway, so let's get rid of it. It's been defeated multiple times. We are below this very short-term trend line, and we did reject from that blob at the top there, but I'm going to remain bullish, and I'm going to put my stop losses below a similar level to the NASDAQ, below the 618 here on the S&P. So we've got long positions from those green arrows, one particularly good one from quite a long way down. I think we have about $500 on that one. All right, now, I've said enough about crypto. We've talked about it. I've talked about the dollar. I've talked about the S&P and the NASDAQ. German 30 is another one I'll be looking at. There's a gap overhead, And if we confirm a bounce here, might get long on the German 30 again. We've taken profit on the German 30 and our longs from here. We have one tiny position from just slightly above us. We've got a gap above us there too. That might need to be closed, and I might need to add some more size to there. And then I'm looking at Netflix for potential double bottom. After earnings, it didn't do much for Netflix, did it? But we'll either bounce here on Netflix at this now quadruple bottom. So there's one touch, two touches, and two over here. So it's a quadruple bottom on Netflix if we hold it. If we don't hold it, we should go down to the next level at about $70. So that's what I'll be watching. Notice how we've got a Bollinger Band starting to roll over towards the downside as well. So it's not looking strong, Netflix. All right, so those are just a couple of the names. Now, I'm going to, instead of going straight to gold and silver, I'm going to talk about natural gas first. And this is another trade I'm very disappointed in from last week. Although we made good money on it, we should have made a hell of a lot more. Unfortunately, we did not. So, and I'm disappointed, because I could have used this money from this trade to because there are a couple of other things I wanted to buy. I wanted to take the profit from here and get into a couple of the stock names that I was talking about earlier. Because I try to rotate my money between sectors, commodities, stocks, metals, cryptos, etc. And rather than using leverage, I try to allocate my funds, just basically divvy it up like a pie. So how much of my pie do I want in nat gas? How much do I want in crypto? How much do I want in that or that or that? And I wanted to take some of this nat gas pie and put it into something else. But I only got half of what I wanted to get. Nevertheless, I shouldn't complain, and nor should anyone else. What we need to worry about now more than what happened is what is going to happen this coming week. But I got long down here, right at the bottom, as low as you can get at 343. And eventually I got out at, and those in the private group will remember, I think 404, right? 404 or 406, I can't remember precisely. So we got like 50 cents on this move, which is fantastic normally in normal natural gas trade. And I got out at the top here, really just under the 50 period moving average. Let's zoom in. There's the 50 period. There's a horizontal resistance line and a channel center line, moving average, Fibonacci, all that sort of thing. Not a moving average, just a fib. And that's why I got out over, well, there's a moving average, the 50. So that's why I got out over there. And then the next two candles, the next 8 hours on Friday, in fact, most of the US session, we had two large moving higher candles moving up. So yeah, I only got half the profit. So that's a bit disappointing. Now, where are we going to go next? Excuse me, I do have a hoarse throat, so I'm going to drink some, this is blue Red Bull. I don't know if you can see it, but it's rather good. And now I've spilled some on my computer now. All right, so what are we going to do next? Now, there is mixed weather report. I'm going to read some notes that I've got for you from the notes I'll hand out to the private group. But the notes are this, and I'll just read them out to you, which I made for myself. So the next 7 days, moderately cold in the Midwest and East. Temperatures, this is as of today, but it may change tonight. We've got some weather models forecasts coming up a bit later on, so this might change. But the next 7 days, moderately cold in the Midwest and East. Temperatures are forecast to be a little bit below normal, mainly in the Midwest, Ohio Valley, and parts of the Northeast. But in the Southwest and Southern parts, it's going to be warm. And that's what you're referring to, Nigel, split, right? Split weather. So warm and cold in different parts of the country. Short-term cold snaps normally lead to a short-lived demand spike, as we saw, and they drive compression rallies, etc. Let's look at the 8 to 14-day mixed view on weather. Long-range forecast, as it stands now, will change. Shows a ridge in the west, a trough in the east. Classic split. There you go, as you said, Nigel. Some colder days expected in the north, but not persistent uniform cold nationwide. So until we get some more info, it doesn't look like weather's really going to be a great deal of help, apart from patchy spikes here and there. So if we get a cold snap, we might see a 10-cent rally, and then a dip. We might see sort of a ranged market, maybe. Really, look where we are in the chart. We've moved right up into this purple area, which is a previous swing high in December, 23rd of December, which gapped down the next the next candle. So this is a 4-hour chart. Let's just have a look here. Was that a rollover? in December. Let's zoom in to where we are. Let's get this right. So December, there we go. Let's just have a look. 18th of December, that's where we are. Yeah, so it's not, oh, that's actually over here. Doesn't look like there's a little gap there. Actually, you can't see it on the day chart. We'd have to look at the Henry Hub, but I think there is a little gap there somewhere. But anyway, but also notice that this futures rollover, we haven't reached the top of the previous contract there, which we might do, and the 50% retracement. Now, I've drawn two fibs on here. First fib is from the bottom to the top. Remember, we were long all the way up, and then we tried to get long halfway as we came down. We tried to get long halfway down, and then we eventually got short. But look where we bounced out. We got down to the 78.6% Fibonacci retracement of this move up to the top. We retraced 78.6%. Basically, the entire contract that we started off with, we came back down to the bottom bar a few pennies. Then we gapped up over the weekend, creating this next ledge, which was a bull flag, as it turns out. And we broke out of the top of the bull flag through the 200 period moving average. All of our longs, we've been adding more and more long positions on at this level. And so we had quite a decent chunk of size on here by the time we took profit. As I said, we didn't take enough profit. We got out too early. The next Fibonacci study I've drawn is from the bottom, from the top to the bottom, the red one here that you can see on your chart. And that's this move down, excuse me, from the top to the bottom where we got long. And I've drawn in the Fibonacci retracement studies in red. You can see we've gone through the 38, that's here. And we're now approaching the 50% retracement level, which is very close to the top of this gap, which is a rollover gap. It's not, it's a contract gap, not a weekend rollover gap. I think it's very likely that we'll get up through that last swing high there. And I don't know at all, because this market will probably gap given the violence of the moves that we've seen in the markets in general and the dollar. The dollar will probably gap. Everything might gap. We might see silver gapping up or down, natural gas up or down. I don't know. It's chaos. And the markets have got imbalances riddled all over the show. Some things have got to catch up. Some things got left behind. Some things went too ahead of others and have got to adjust. Silver went before gold. So gold might have to catch up with silver to the downside, and so on and so on. And now we've got missiles flying over Iran too, which could deal a blow to our hopes for a short oil price. So it's very, very difficult, folks. And a lot of people got destroyed, wrecked, and hurt this last few days and last weeks in energy, in metals, and in crypto. Just a very, very bloody dance floor on Wall Street. And so I think the most likely scenario is that it's going to be messy and that we'll probably have some continuation here, given that this 4-hour chart candle, Friday's last candle, closed with a shaven head. So it's a bullish close. Let's look at the day chart. I think it was a massive bullish candle. Shaven bottom, not quite, a little wick at the bottom, but a shaven head. That's where we got long, folks, all the way down there. First of all, right at the bottom, and then we piled on the longs here, and we got out halfway up at the 50-period moving average on the day chart, not having grabbed the rest of the other half of the profit. So that's where it is. But we have a shaven head candle here up against resistance. The fact that we're up against resistance means that it's going to be a little tough to get through. The fact that we have a shaven head means it's going to be propelled through more easily. And the fact that it's a weekend means that we might gap up or gap down. I suspect that we'll gap up and we'll hit the 50% retracement level at here on the futures chart at $4.56, and then probably pull back into the gap back down to where we're currently trading, and then potentially a little bit lower beyond that, back down to where we started maybe. But overall, I'm looking to stay and get long on natural gas futures, and I'd like to be long from my base case is like $3, maybe fractionally below there on occasion, up to $5, maybe above there on occasion too, up into 550. We've seen up into the 6s on the continuous. So not quite, actually, almost. We got to 5.78 on the continuous and 4.42. The futures caught up with the continuous dramatically. So coming back to the futures, and someone was saying, on the continuous price, when we have such big variations in the contract price between the front month and the forward months, we have massive overnight costs on the continuous. As I said earlier in this video, go back and watch it. If you're struggling, if you're trading natural gas and continuous and struggling with the overnight holding fees, Go and have a look at what I said earlier. Try and close your trade before the day closes and reopen it the moment the market opens the next day. It means you've got to stay up around midnight and do that every single day, but you might save yourself a bit of money. All right, so that's the only way around it. And particularly when these contracts are so far apart on the futures forward curve, you're going to get massive rollover overnight costs on the continuous to deal with that gap. Right, going back to this chart on Henry Hub futures. So shaven head candle, I suspect just technically that we'll gap up to the 50% retracement at 4.54, and potentially we've got three levels above us. We've got the 38, let's ignore the green ones. We've got the 61.8% retracement at the top of that gap on the left-hand side on the 1st of December. Another gap over here, which might need to be filled. Remember, we were talking about this gap some time ago, and we've kind of forgotten about it. So there's a gap there. I would not be surprised if the next move on natural gas was up to 4.79, 4.8, and then a rejection. But I don't know. So I don't really, I'm not predicting. I don't know. I've got no clue. These markets are wild right now, not just natural gas, but everything. Risk assets have gone berserk, and natural gas is a risky, if you want to, it's a risk commodity, we could put it that way. It's a risky commodity. It's the most violent, fast-moving, dramatic, and annoying, and widow-making commodity of them all. It's the crypto of energies. All right. So that's my best guess, folks. Don't rely on what I'm saying. Don't plan your trade based on what I'm saying. I don't know. I'm going to wait for the market to open, and when the market opens, just like on crypto, if you've been buying crypto, you know, Bitcoin, Ethereum, Solana, Ethereum, if you've been buying that instead of hedging throughout this massive drop, and even hedging hasn't saved some accounts. Even hedging hasn't saved accounts who got blown out because they didn't hedge enough, or the hedging wasn't done properly, or the leverage was imbalanced on the leverage or something. You know, even that has wiped out a lot of stuff. And so here on natural gas, which is the most volatile commodity, it's going to swing around wildly, and I don't know what. I have no clue. I just don't know. But I do suspect that if anything, if I was to take a wild guess, and I won't be trading on the basis of this wild guess, it's not a prediction, I would guess we'll try 4.54 and maybe try 4.81, either on a gap or on a rally or something like that. I don't know. I think that's most likely. But if it doesn't happen, and I don't really want that to happen because I want to get long on natural gas, and if we move up first, that means I've got to wait for it to come back down. Unless we move up, you know, significantly, and I can get short at a much higher level. I don't want to be really trading in betwixt and between, diddling in the middle. We're right in the center, Mr. Fenter. Right in the center, Mr. Fenter. And we don't want to be trading right in the center of a very messy range in a very difficult trading period when it looks like all hell broke loose just ahead of the potential Iran blockade, invasion, airstrikes, whatever you want to call it. It's not going to be good. And I think that's why Trump's trying not to do it. He's trying to avoid it. Trying. And I hope he does. I mean, I don't know if I hope he does, actually. I don't know what I don't know anything about it. I just don't know. I mean, I do hope that those Iranians who are being so persecuted find some relief. I really pray for that. But I'm not sure if bombing Iran's going to actually help. Anyway, this is oil, talking about Iran and OPEC. OPEC will be not necessarily happy with this rally in the price of oil. It gives those countries that produce small amounts of oil at high cost compared to OPEC countries who produce large amounts at low cost. So smaller countries, small amounts, high cost, cannot compete when the oil price is like $60 or $55 or $40 or $30. Maybe the levels around 40 or 50 or 60. I don't know exactly, but they can't compete. And so, you know, when the prices are low. So when the price moves up like this, it brings a lot more supply into the market from countries that would like to participate in this market. And that would probably bring the price back down. That's why it's difficult to get it higher. We're right into this order block, right into resistance above all the moving averages. I went short again on Thursday. We've got some small shorts down here, not enough. I had another one there on Thursday, but I would like to get some more. And I think we can get right back down to this double bottom, now triple bottom on oil, and break through there at some point. And I think we might even be able to get down to 50 at some stage. Now, a lot of this will depend on any deals with and wars, deals and or wars. It seems to be the Trump playbook, like deal or war. What do you want? Do you want a deal, or do you want to be obliterated? So deal or no deal, this is a TV show about that. With Iran, with Venezuela, with OPEC getting involved, I'm sure they've got sniffing around what's going on. We'll find out soon enough. But I think there's a chance that if something goes wrong this weekend or next week or whenever, if it does, we might have to spike up into the next order block and point of control, which is all the way back up towards $70. We're currently trading at 65. It's not that far above us, but I want to start moving down now and start making some money off here and not draining money as we move higher. So we don't have a big position. We've been very tentative here, but I'm allowing for a spike up into that block there and the swing high just under $70. 69.80 would be ideal and perfect, as I like the 80s and the 20s. So that's oil and gas, folks. I'm going to come to the questions in about 10 minutes, 5 minutes time, and we'll get to them. But I must now talk about silver. Did I talk about silver? I think I did. Maybe I didn't. Yes, I did. But I don't think I talked about it enough. But just to say, silver might carry on moving. I think this is where JP Morgan closed their short trade, where we reset to the beginning of 2026 to the penny to January the 2nd, down into the 50-day moving average to the penny, a big bounce out of there into that block over there, which is also the launch point for this last part of the rally, the previous launch point. Let's clone this. Previous launch point was here into the previous rally, right? So launch point, we came back to the last launch point and bounced out sharply. We might have to faff around in here for a little bit, but and maybe spike down below the JPM exit zone level at 74.5, maybe. But I'm hoping that we'll try and claw our way back up and that this was a reset. Same on gold. And gold didn't come back down nearly as much as silver. And I have had no position on gold until Friday. We've, all these positions I've taken profit, closed them. We got a short right at the top on gold, right at the top. And we took it out here at the 50-period moving average. You'll remember that. De-risking the tape, as I said, flowing from assets back into USD, into the US dollar and tethered US dollar, T, moving back into there. That's what we saw with gold. Just another reset, just like silver, back to the 100-period moving average. We didn't get all the move down, like I didn't get all the move up on natural gas. We got out halfway down, not quite, a little bit more than halfway, did a little bit better on gold, but I didn't get the rest of the move down. I didn't think we'd be moving down, through the 20, 50, and 100 all in the same day. Unbelievable. Anyway, I got long at the close of play on Friday here on gold, right there at about 4,800, call it 4,900. So we're long on gold there and looking for this to move back, probably only to the underside of this trend line, the breakdown point and the 50-period moving average, the red line here initially. And then I think we're going to be faffing around in these lower levels for a little bit. And then eventually, like silver, I think the central bank buying and other interested parties, hedge funds, etc., will eventually drive this back up. And I think if that was the JP Morgan exit point on silver and gold did a similar bounce down to the 200-day moving average here, is that 4-hour chart, down to the 200 period. Let's look at the day chart. Right, back into the channel, back to the channel center line. That's where we started getting long, very close to where we got long originally. That's where we got short at the top. We got out at the top of the channel. Makes sense, right? Not the wrong place to get out, but we progressed further on the day down to the 20 channel center line, bounced out. I got long on gold, looking for a retest of the high eventually, and then a continuation of this move. These are very small positions. We'll be adding more if and when we can. Same on silver. So long on silver, long on gold, and now nothing on platinum. I don't like platinum, but long on copper. And copper, for the first time in a while, we've got long again. We took profits sort of in, I can't remember, probably not all of it again. I probably didn't get all of the move up on copper. Been getting out a little early. It's annoying. Try not to get out of trades too early, folks. When you have a target, give it a chance at least to get to that target. Unlike me, my target was all the way down here, back to the 200-period moving average here on this 4-hour chart. But I took profit early at the top of that green line or something like that, somewhere around that zone. Anyway, we've got long now. So we're now no longer short, but we're long on copper. We got down to the 200 period moving average. I was long on, we've been trading copper quite frequently, unusually for me. And we got good moves on these big moves up and down. And now we're over here. I want to go back to the day chart very quickly and just show you what I think is going on. I thought we might do something like that, but we did it in one day, right? And that's what I was projecting. So I literally had that drawn in there from Wednesday or Thursday. And I thought, yeah, that's kind of the play. And we want to get long when we get back there. But we did it in one day, straight back down. And we got long at the same price. So same play, just about like 2 weeks early, something like that. 2 weeks, cut off 2 weeks of waiting time, which is good, So that's that. That's copper. So we're long on 3 metals now, gold, silver, and copper. Bitcoin, I'm still short, very short. Now fully hedged on Bitcoin. Not fully, I'm 50% hedged on Ethereum and not fully hedged, not hedged on XRP and Solana yet. But of course, if these break through and Bitcoin keeps moving down, the whole lot will be hedged. And then we've talked about stocks. NASDAQ dropping off more than S&P because of the tech-heavy nature, and the dollar finding its feet aggressively, bouncing out of that zone, breaking up above the triple bottom, and massively bouncing back up towards the gap that needs to be closed just overhead, and then some of these moving averages above us. So very fascinating day, folks. I'm going to go have a look at this one chart. VIX has not given us a sell signal, and I have to keep saying this. S&P bears not allowed yet on the VIX. Still waiting for this, all right? Has not happened since December 24. 1 year ago, we have not traded the VIX. The last time we traded, a year ago. I think we might have got along there, actually. One occasion last year, I can't remember. Looking for that to happen, move back down into the green zone to get long on the VIX. And another really interesting, Bitcoin dominance rushing up. Just quickly show you that. Just a couple of things. The altcoin traders weren't like that. It looks like it's going to break up higher, folks, and actually start moving up quite dramatically, Bitcoin dominance. And I think when Bitcoin starts finding its feet, Bitcoin dominance will turn around. But one thing that did turn around very dramatically, I pointed this out last week, and I said, I really want to be able to trade this, but I can't. Don't know where to trade it. I haven't done enough due diligence on it anyway, in terms of where to trade it. But this is Bitcoin gold. And I said, I wanted to buy on Friday, basically. And we've now defeated the first trend line. We've got 2 more trend lines above us in what looks like it might end up at some stage in the near future bouncing out to start the next leg up. After that very beautiful and dramatic reversal through the first falling trend line on Bitcoin gold. All right, and I think that's it. Oh, softs and grains. Just to say, coffee. I don't have any. I was looking to get short on coffee. We have been short on coffee. We've taken profit on those 2 trades down at the trend line here. We've not got short again, and it's collapsing. So unfortunately, we've lost out on that. But I am long on wheat and cotton and soybeans. They all came back a bit yesterday, not a lot, not bad actually, considering that the dollar had such a big rally. And as these are all priced in US dollars, they moved down as the dollar moved up. Basically, that's it. So I expect as if the dollar, stabilizes and starts to drift down again, I think we'll see these commodities carry on moving up. And that's all, folks, on those charts. Now, it's been a hell of a day, hell of a weekend, and I'm sure a lot of you are feeling absolutely devastated by some of these moves. I'm feeling devastated because I have a very large Bitcoin. I'm all about Bitcoin, as you can see behind me on the wall there. Instead of dollars or euros or pounds, I keep my money in Bitcoin. All right. Turns out not the best idea because I've lost half my money. And this is not trading, by the way. This is just Bitcoin, right? Half of it's gone. I'm not worried about it, but I don't like it. I think the Bitcoin story is fine. It's perfect. I have no problem with it at all. I'm not concerned. I'm not worried, but I'm highly annoyed and irritated because I would have liked to have been at $150,000 a coin instead of 70, and we're not. So I can grumble and moan as much as I want. It's not going to change the facts. I've got to hold on to my hodl stash and forget about it, which I've done. And I'm now trading my trading stash and looking for options to get long. Not yet, though, when that occurs. And as I said, could be close to the low 60s instead of the low 70s on Bitcoin. So that's it, folks. That's basically, and I know a lot of people got literally liquidated this weekend, a lot. About 1 million traders, actually. I got the number. In fact, it's on my screen over there. 950,000 traders got liquidated, totally liquidated. Now, what that means is that their accounts went negative, all right? So they have literally not a penny in their accounts. If you did lose money and you still have like 10 or 20% of the money in your account left, Bitcoin, Ethereum, any of the altcoins, you've still got a chance, because these can 10x, some of them can. But, and crypto is a very different kettle of fish to normal regular trading. But a lot, 1 million traders got wiped out. So very, very difficult, tough weekend. And I hope that if you are trading crypto, you know what you're doing. And if you don't, please come and join us in our private group. If you've got money left over and you want to trade crypto and you don't want to lose it all, it's a really good idea to join our private group and listen to Crypto Paul, who's the most risk-averse crypto trader and yet very profitable crypto trader that I know. So he's able to make profits, not claimed 100x, 1000x on Bitcoin or something like that, but proper trades, structured trades on serious coins. Not all of them. Some of them are really alternative coins, but most of them with a risk-averse approach to it. And so able to make money, maybe not as much as Bitcoin made at 1000x when it pumped up and collapsed back down to zero. Maybe not that much, but certainly good money. And I'm being a little bit jocular about Bitcoin, and it's maybe a bit rude. So, folks, I'm going to read some of the comments now. I think that we probably actually don't have a lot of comments. Good morning, everyone. I think maybe I've covered most of the things, but let's read through. Cocoa. Yeah, Cocoa. I don't know about Cocoa. Let's have a quick look. Let me just get rid of that thing. Cocoa, I think, actually, I still want to get short on cocoa and coffee, but I think cocoa's got a chance. I think they've both got a chance of a bounce now. The reason is because both of these beans, particularly not cocoa so much, but it's, we're below the channel center line. We're below that previous swing low. I wouldn't be looking to buy here, but I would certainly look to short at the top of the channel or somewhere higher up into some of these zones, maybe under this ledge here for a move back down. I wouldn't, it might move up. I don't know, but we're in a downtrend. If you're going to be buying, you're buying counter trend. Yes, it's a commodity, so we do range trade commodities in general. It's not a directional market, but it's moving down at the moment. And we've got a little daily reversal. Yeah, look, I mean, every trade, you can, like I always say, you can trade anything with nipples, right? Comes from Meet the Parents, the film. Go and watch the film. Ben Stiller and Robert De Niro, Meet the Parents. There's a funny line in there. It says you can trade. It says you can milk anything with nipples. You can trade anything with nipples. And what we've done is we've swept that double bottom low here. This is quite interesting, actually. Maybe it's not a bad idea. And because I'm not looking at this on a daily basis at the moment, I'm rather more focused on my crypto and so on. But let's just put a line across there. You can see we swept what was almost like a triple bottom, right? Triple bottom there on cocoa. We swept the low and came back, closed above the low, forming a spike low reversal hammer candle with a wick. And so you could actually get into quite a good trade here by putting your stop or hedge below that low, maybe just give a little bit of space, and then and get long really at the open on Monday and look for a move up to the level that I think we could get to. Now, also, there's another reason, really good reason on cocoa to look to get long, is that we've got a gap there that's still unresolved up in this yellow, what I've called cocoa Moab. Let me put that in there. What I mean by Moab is the mother of all breaks. So cocoa Moab. So in cocoa Moab, there's a little gap, and I think maybe we've got to just get into the gap. Actually, straddles cocoa Moab, which is also the major support level, as you can see. So yeah, maybe we just got to retest there and then get short, and your long could work. Let's have a look when this market opens up. And thank you for pointing that out, because I might actually have a little go at that. And I hadn't spotted it because I haven't been looking at these charts enough because of my Bitcoin annoyances that are going on at the moment. And also dealing with people, a lot of folks have been emailing me this whole weekend, asking me what to do with this, what to do with that. They got blown out on natural gas. They got destroyed. Someone got destroyed on platinum. Don't trade platinum if you don't understand it. And palladium, these sorts of names are difficult to trade. They move in chunks. They're illiquid sometimes. Loads of people, Bitcoin, people getting undone through leverage and stuff. Very, very difficult. A lot of this can be recovered, folks. If you did, as I said earlier, if you've lost like 20, if you're down to like 20% of your Bitcoin, right, and you lost 80% of it, it's not all over. But don't waste the rest of the 20%. That's all I'm saying. Learn how to do it. Come and join us in the private group. It's $100 a month or thereabouts. You save yourself $10,000 a month in trading losses and spend a fraction, a piddle, $100. Come and join us. The reason I'm saying that is because if you're down to like 20% of your crypto and you've lost it all on Bitcoin, Ethereum, Solana, Litecoin, Link, any of these, and millions of others, if you've lost your money on that, but you've still got 20% left and you want to try and recover, I think you can. I think it's quite possible, quite likely if you do it properly. But if you don't know what you're doing, you'll never get there. So come and join us. We'll help you. I really mean that. Otherwise, don't. It doesn't really matter to me. This is not my day job, right? My day job is trading. We don't have a huge business here. This is not my most important thing in terms of making money. My most important thing is to trade well and to trade safely and to trade profitably. And the reason we have the private group is to teach you how to do that. Not to give you signals and say, do this, do that. This is, buy this, buy that, sell this, buy. No, the objective is to teach you how to do it. You can ask about my trades. You can see what trades I'm taking. I'll tell you the reasons why. You can watch all the videos, go through all the material, and find out how to do it for yourself. But don't go around willy-nilly trying to make back that 80% you lost by high leverage, dart throws at a dartboard. And as I say these things, you know exactly who you are. I'm talking to you, right? Throw the dart and hope for the best. So look at these all moving down. Ethereum, dramatically. I'm fully hedged. I have no long positions on Bitcoin. None. Zero. I've only got half of my longs on Ethereum and very little on Solana and XRP. Still got longs on those, but zero longs on Bitcoin. I may even be tempted if this starts moving down fast enough and dramatically enough and breaks down through the mid 70s and low 70s. I may even get even more short and direction myself short for the first time in, I think, maybe ever. On my trading account, not talking about my my Bitcoin account, my long-term account, if you wish. All right, folks. Right, I was going through the questions, wasn't I? I've completely distracted myself. Good day from Kansas City and India and Qatar. And good day. It's nice to see everyone here. I'm really pleased everyone's made the effort. Good day, Sean. I don't trade silver, man, mate. I trade silver and I trade gold. And I trade Bitcoin mostly. I don't trade the alts mostly either. I try to trade the purest form of whatever it is. I try to trade the futures rather than ETFs. I try to trade the metals rather than the miners. I try to trade everything else rather than the supporting structures. Apart from MSTR and Coinbase, which I have been buying, not very successfully, as you will know. Although MSTR had, strangely, as Bitcoin dropped on Friday, MSTR had quite a good bounce. Although Bitcoin bounced on Friday as well, a little bit. All right, let's carry on. All right, does that help on Coco there, Lucas? I hope so. Tesla, yeah, Tesla's a good one. I like Tesla. Let's go have a quick look at Tesla. I'm a big Tesla fan, and I've been long on Tesla forever and a day. You can see all my longs. Going back to last year, last long was over there at 229, and one in November at 383, and then I've got two slightly higher up, and that was in December and December, two at these higher levels in December. We come back down. We are down below the 100, the 50, and the 20-period moving averages. We've got a little double bottom here at interim support. Nothing major, just a little flat bottom right across there. Maybe a head and shoulders or an M-shaped pattern. Doesn't look like it's going to hold here, I have to say. And we've also got another couple of gaps down below us on the low side. And so I might hedge Tesla if we break down simply just down through this level, this purple line, aiming for the 200-period moving average, but probably a gap close all the way down into, let me find, where's that arrow? Probably into there, right? There's an empty gap there, and there's another one there, and there's another one there. There might be one further down. I don't think so, though. I think that's it, that gap there. I think that's where we've got to be on Tesla, maybe. But I don't know, folks. These markets have all sold off and been so violent. The NASDAQ sold off dramatically, but Tesla, MSTR, and not so much Coinbase, NVIDIA, quite a number of these names bounced on Friday rather than carried on moving down, including Tesla. Bounced off that double bottom, but it doesn't look good. I mean, we're below the moving averages and they're curling down, and we've got, lower highs and so on. It might just hold here. I don't know. I'm long, so I hope it does. But if not, we'll hedge it and take some shorts off down here for a profit in the gap. We'll probably be below the 200, but we might bounce at the next level as well. So, it's all about just watching to see what happens. We're not trying to predict these markets, just want to see what happens. And maybe we have to get back down to the bottom of that gap, which is over here, and that flat bottom with a couple of spikes down below it. So 2 key levels on Tesla. I'll be watching both of them, hoping that we'll hold the top one. But if we don't, we'll look at the next one. And then potentially, if we just keep moving down and, bust or gap down through these levels and the 200, then we'll have to close that little gap down there. And that's about 340-ish on Tesla. Something like that. Something like that. Holding silver from 34. Excellent. Well done. We got long at 27 on silver, excited hot air balloons. And I think it's going to carry on moving up. So good on you. You got long more or less at the same price as us, just slightly higher. I sold natural gas too early. I know I sold it too early. I know, mate. I know. I'm kicking myself. Sold it too early. Looks like one more week of Arctic air and then a bullish report on Thursday, shorting on Friday. Yeah, that's what I just said, Martin. I think it's Martin, MG. That's what I just said, mate. I said, I think we might have to test slightly higher on natural gas. Let's go back to that chart. And as I said, those levels slightly above us. First of all, the 50-period moving average here. Then there's that little gap. The top of that gap's at the 618 fib. That's at 4.8. And I got out at under 4.1. We're currently trading at 4.42. So yeah, I missed out on 30 cents. I got 50. I missed out on 30. So I got actually more than half of it, but still 30 cents, missed out on 30 cents. And it just went straight up, just literally went straight up. The moment I got out, it just went up to the top of this gap. And potentially we could gap up higher. I don't know. We're going to play this by ear. This market opens in about, it's 8, 9, 10, 11, 12, 5 hours time from now, as we're speaking. And this session, this live session ends in 2 minutes time. So we've been going an hour already, folks. I hope you've enjoyed it. And I hope it's been useful. And I really do hope for many of you's sake that you managed to get through the violence of natural gas, metals, and Bitcoin this weekend. Absolute violence. Absolute violence. And a 10 sigma move. Let me just go back to this. Let me just tell you something. This move on silver, this 10 sigma move, means that this never happens. This has never happened before. Silver, I don't think it's, and I think we came something similar to this about 30 or 40 years ago. I'm going to do some research a bit later. But I don't think we've ever had such a violent sell-off in silver to the extent of a 10 sigma. In other words, so rare that it could not have possibly happened without some serious inputs of energy into the system. Like all systems, if you add energy, something happens. But you've got to add energy to create a sense of chaos and entropy becoming crazy. And so that's what happened on silver. And you won't see this. You will never see this again. You won't see this happening on gold and on silver. You might see this happening on Bitcoin, sure, but these moves have been pretty violent on Bitcoin. And remember the natural gas contract. You won't see this very often as well. And if you've been trading with me for the last, I think 5 or 6 years on X on natural gas, I think it's 6 years now. I don't think we've ever had a contract going right up to, and not just right up, by the way, from 3.4 up to 5.6. So $1.20 up halfway through the contract, and then all the way back down to the bottom again at the end of the contract. Violent. We've never seen that before.
not in the last number of years. I've seen it a few times, but not in the last 3 or 4 or 5 years. So that's it. So we're short on oil, as I said, looking to see what happens this weekend. This weekend will be crucial. And of course, we've got the government shutdown deliberations, which might be on already. I don't know. We've got the Iran stuff going on. We've got the non-farm payrolls jobs report coming up this Friday. We've got a market which is scared, nervous, and skitterish. But I don't think these moves are structural collapses in these markets. Silver, gold, Bitcoin, natural gas, oil. Oil's moved up. I don't think these are structural systemic collapses. I think they are partly manipulation by people like JP Morgan and others in the Bitcoin world. JP Morgan in the silver world, we know because they've admitted it. They sold a massive amount and got out at the bottom, literally at the penny. Don't know if that's allowed, but obviously it is. Why they're messing around with the silver market. And so violent moves, but I don't think these are structural. I think they manipulated moves and just resets after too much euphoria, too much leverage, too many, too many eager beavers getting in on long gold, silver, natural gas, Bitcoin, etc., and having to be taught an unpleasant lesson. As I said to you earlier, if you've lost 80% of your Bitcoin, and we'll be talking about more of this in the private group, I'm sure, during this week, the best way to trade your way back out of that safely and securely without risking further your 20%. Keep your 20%. If you want to. You may have decided that this malarkey is not for you and you want to close your trading accounts and never trade again, or you might be even more excited about the violence and volatility of trading because of what you've seen and want to put more money into it because it's got so much opportunity. We've talked about silver a lot, so I'm not going to talk about it again. And I'm not going to go back over things. So true, says Vishesh. So sick of ex-influencers who just got back and edit and delete posts and run accounts claiming 100% accuracy. Took me 2.5 years of loss making to finally find the team ArcisFX. Thanks, Vishesh. Thanks, mate. They are so dishonest, these players on X and on YouTube, so dishonest that they have just told one of the biggest, they claim to be the biggest crypto channel on YouTube. They claim it. I don't know if it's true. I don't care. And why should anyone care anyway, whether it's big or small? What matters is whether they're talking sense or not. Claim to be the biggest. And yet, last week, literally last week, they were saying going all in on altcoins, all in on various altcoins. And this week, they're saying go all out on all altcoins except for like Bitcoin, Hype, Tron, and maybe, that Bitcoin replacement that's private. Can't remember the name. The private Bitcoin coin. So they're saying get out of all of the alts and go all in on these other things now. Bitcoin, Tron, Hype, and the Bitcoin privacy replacement. Totally irresponsible. And so people have now literally gone out and sold all of their altcoins. It might turn out to be the right play. I don't know. They have no place advising people who are parents, mothers, fathers, aspiring students, business owners, investors, startup companies, advising those people so irresponsibly is just unbelievable. These are people's lives. Stop doing it. And you know who you are. I'm not even going to mention the name, but you know who I'm talking about. And in fact, I had a soft spot for this particular company until about a day or two ago for another reason. I thought maybe there's some substance to them, but no longer. Be very, very careful. Do not follow people who tell you to do this or do that, go all in, go all out on X, on YouTube. All these followers, all the millions that they made last week and all the millions that they made this week, when everything that they've told you has been diametrically wrong, opposite. It makes me crazy. I do post my alerts in real time, Dragon Boss, every single trade, entry, exit, adjustment, every single trade without fail. Natural gas goes a bit higher and the Widowmaker shows up on Friday. Yeah, we talked about that. Exactly. I think that's a very good assessment. And I think that could be it. But we don't know. MG. We must wait to see how this weekend opens up and what happens thereafter in the next opening 4-hour candles 2, 2 or 3 candles is a good wait after the weekend to let things settle down. Coffee we talked about. Natural gas could go back down. Lithium and uranium, yeah, still long on lithium and uranium. I'm glad you brought that up. Thank you, MT, because these did come back a bit as well. Not too bad, really. I'm long on uranium. I haven't just not much to say about these. I've got 3 long positions down here below the order block, 1, 2, 3, and I'm still long. We broke out through that swing high. We've pulled back a bit after the breakout, after forming an engulfing, piercing candle pattern over here, and just pulled back to the 20-period moving average. Everything pulled back on Friday and on the weekend, right? This is all a reset. I think this is what it is. Everything reset. Everything. Some things reset more than others. Uranium reset a tiny little bit, almost nothing. Tiny little reset on lithium, a little bit more because we got down below the 20-period moving average on lithium. I'm long on lithium from over here. No, we got out of lithium. Actually, we were long. So we got long on lithium over here. You can pause this and check out the prices. We got long there, got out there, got long there, got out there. So we've had good profits, really good profits on lithium. And it's now moving back down below the 200. We've got a little gap here, or quite a big one actually, where my gray arrow is, that we've now filled. That's good. So that's the first obstacle out of the way for longs. We've got a couple of other little tiny gaps down below here. They don't always get filled on lithium. Not too worried. The big gap did need to be filled though, I think. And maybe we can get back down to the 50 and maybe down to this flat top breakout area for another go at a run up on lithium. So, so I don't have a position on this. I thought I did. I just remembered we took profit a few days ago. So got long there, got out there, got long there, got out there. And now I'm looking to get long again. And I'm hoping to get long somewhere into this point of control pivot point here at about maybe 84, something like that, allowing for a dip down to all the way down to 56 if must be, or 59 to 56, these next swing lows, something like that. But yes, I'll be looking to get more long on lithium and uranium. I'm already long enough, so I don't need to add more to that just yet. But if it moves higher, I might have an opportunity to add fractional more size to uranium. Orange juice, I'm not trading at the moment, mate. And sugar, I'm not trading at the moment. So I can't comment on those. I mean, I could. Let's have a quick look at sugar because I've got that chart up. I won't look at orange juice because I haven't got the chart on at the moment. And where is sugar? Let's have a quick look. Sugar. Oh, no, I don't have the sugar chart up. I'm sorry. Hang on. It's the wrong page. Maybe I do. Hang on. Don't panic. Here you go. Here's sugar. Yeah, sugar, right at the this sort of point of control here and dripping down a little bit. I still want to get long on sugar. And we've not really managed to get moving up beyond that point. Can't remember if it's yeah. So that I think basically, it looks to me like sugar might hold this low here. It's a little bit of a double bottom over here, but I'm not 100% convinced. I'm just waiting to see what happens if we bounce back down here. I might add some more sugar longs, or if we break down here, I'll look for deeper dips to get long. I'm not quite sure where. I haven't done a lot of analysis on commodities recently. Or paying a lot of attention to them, just keeping an eye on them because I've been trying to deal with this very errant Bitcoin trade, which is now fully hedged. As I said, no risk on it, but it's annoying. And also, I've got to undo my silver hedge at the market open today after having that violent move on silver, which got pretty messy. So I paid less attention to things like orange juice and cocoa. Folks, have a wonderful day. And the weekend's over now, so it's time to get back to work. For some of you, it's only lunchtime in New York, so I guess you'll be having a barbecue in Australia, or braai in South Africa. You may be having a braai on your balcony in, like 40, the addresses are weird, like 40 East and 329 West, whatever, somewhere in New York City, in Manhattan, maybe, having a barbecue on a Sunday. So something like that. But have a great afternoon wherever you are, or evening. It's evening for me now. It's 8 o'clock in the night. So midnight, markets begin to open up. Crypto rolls over, and 1 o'clock my time, everything else opens up. Natural gas, metals, stocks, and I'm going to be super busy, probably the whole night again. Trying to adjust my silver position, but also watching Bitcoin and the other alts like a hawk to see if maybe, just maybe, and I don't think so. I must emphasize, I don't think so, but maybe, just maybe, we'll be bouncing out of here today, and we've got a medium or short-term or even a longer-term bottom in place. If that is true, and I'm not saying it is, and I don't think it's likely to be true, but if it turns out that this is the bottom, I need to start getting unhedged on my Bitcoin, Ethereum, etc., and start riding this up. I don't want to be trapped in my short hedges whilst we're moving up. So I need to be watching like a hawk, and I'll have all my alerts, my phones, my desktops, my iPads all over the house, computer screens, much like those guys in the Market Wizards, who have, one of the guys has a screen in his toilet as well. I can't remember which one. Larry, someone, I think, has a screen in his toilet. He can't even miss the shitcoin while he's on the lavatory. And there you go. Okay, folks, have a great day, and I'll speak to you in the next video. And once again, please do not forget, and I'm going to remind you of this one more time, that coming up tomorrow, I'll be doing a separate natural gas video analyzing the market and how it's opened up, how the weather looks, where it might be moving next week. So make sure to join me for that. It's a pre-recorded video I'll be releasing tomorrow. And then on Tuesday, Crypto Paul will be back with his usual weekly deep dive into Bitcoin. So make sure to be subscribed and not to miss that. And of course, the very best altcoin action can be found on Altcoin Gems on Friday. That's this Friday, from Paul. And he's got some exciting news and opportunities to look at on Hyperliquid, Hype, and Tron, Tron. And there might be some alignment with those guys that I was talking about earlier. Maybe those are decent coins, but one should not be so irresponsible with advice on the internet to anyone at any time. All right, speak to you soon. Take care. Ciao.